In 1999, Japan was going to own the world. Its stock market was the largest on earth. Its banks held more assets than any country in history. Japanese firms were buying American skyscrapers, Hollywood studios, and golf courses. A single square kilometer of land in central Tokyo was worth more than the entire state of California. People called it the Japanese century. Then it ended. Not with a war, not with a natural disaster, with a slow, grinding, almost invisible collapse. One that has now stretched across 3.5 decades. Today, Japan is the world's fourth largest economy. It was third, before that second. The trajectory only goes one way. Its population is shrinking faster than any country in peacetime history. Its national debt is the highest in the world at 235% of GDP. Its birth rate hit a record low in 2025 for the 10th straight year. Its economy contracted again in mid-2025, and its most iconic companies Toyota, Honda, Sony are moving production out of Japan to survive American tariffs. Japan is not having a bad decade. Japan is in the middle of a slow-motion national emergency, and almost nobody is talking about it. This is the story of how Japan got here and whether there is any way back. To understand what Japan is losing, you have to understand what it built. After World War II, Japan was destroyed. Atom bombs, firebombing, occupation, its industrial base gone. Its military disbanded. Its national pride shattered. And yet, within 20 years, Japan had pulled off what economists now call the Japanese economic miracle. Between 1955 and 1973, Japan's economy grew at an average of 10% per year, every year, for nearly 2 decades. It was the fastest sustained economic growth of any major nation in modern history. How? The government picked winners. It directed capital toward manufacturing, steel, shipbuilding, chemicals, electronics. Companies like Toyota, Sony, Panasonic, Toshiba became global giants. The Japanese workforce was legendary for its discipline, its loyalty, its productivity. By 1968, Japan had the world's second largest economy, behind only the United States. By the 1980s, Japan was not just competitive, it was dominant. It held 30% of the global semiconductor market. It made the best consumer electronics on earth. Its auto industry was threatening to eat Detroit alive. And then came the bubble. In the mid-1980s, Japan made a fateful decision. To stimulate the economy, the Bank of Japan cut interest rates dramatically. Credit became almost free, and Japanese companies, banks, and the investor did what people always do with cheap money. They speculated. Real estate prices in Tokyo went vertical. By 1918, the land under Imperial Palace in Tokyo was theoretically worth more than all the real estate in California. The Nikkei stock index hit 38,915, a peak it would not reach again for 35 years. Then in 1989, the Bank of Japan raised interest rate to cool the overheating economy. The market did not cool. It crashed. By 1992, more than $2 trillion had been wiped out. Land prices collapsed. Banks that had lent against inflated property values were suddenly drowning in bad loans. Japan's financial institutions became what economists call zombie banks, technically alive, kept breathing by government bailouts, but unable to actually lend money and drive growth. The economy flatlined. This period became known as the lost decade. Then the lost 2 decades. Now economists quietly refer to Japan's lost 3 decades. 35 years of underperformance. Here is what makes Japan's demographic crisis different from every other country. It's not just bad, it's catastrophically bad, and it arrived faster than anyone predicted. In 2025, Japan's birth rate stood at 1.15 children per woman. The number needed just to maintain a stable population is 2.1. Japan is at barely half that level. In 2025, births in Japan fell below 670,000, the lowest number since records began in 1899. 17 years ahead of even the most pessimistic government forecasts. Deaths outnumbered births by nearly 9 lakh people in 2024 alone. That is the 18th consecutive year of natural population decline. Japan's population has now shrunk for 14 straight years. It peaked at 120 million in 2008. By 2024, it had fallen to 123.8 million. By 2070, official projections say it will be 87 million, with nearly 40% of those people over the age of 65. Think about what that means. 40% of the country will be elderly. The people paying taxes, running factories, caring for patients, driving trucks, building homes, there simply won't be enough of them. Japan is already the world's most super-aged society. As of 2025, nearly 29% of the entire population is over 65. Children under 14 account for just 11.2%, the lowest share in recorded Japanese history. The old age dependency ratio, the number of elderly people per 100 working age adults, has already hit 50. By 2050, it could reach 80. By 2022, nearly half of Japanese companies were relying on workers over 70 years old. Japan is running its economy on retirees. Why is this happening? Japan has one of the most expensive and unforgiving societies in the world for young people. Housing costs in Tokyo are punishing. The culture of overwork, karoshi, or death by overwork, is a recognized cause of death in Japan. Leaves young professionals exhausted and unable to imagine raising children. Women who leave the workforce to have children frequently cannot return to equivalent careers. The cost of raising a child in Japan is among the highest in the developed countries. The government has tried. Childbirth subsidies, parental leave schemes, childcare expansion. It has spent billions. None of it has worked because the problem is not financial incentives, it is structure. Young Japanese people are rationally responding to a society that makes family formation expensive, precarious and incompatible with career success. And so they don't have children and the clock keeps running. Japan's national debt is the most extreme in the developed world. At the end of March 2025, Japan's gross government debt stood at 1,324 trillion yen, equal to 235% of GDP. The IMF confirms it is the highest debt to GDP ratio among all developed economies. Greece, which nearly collapsed in 2012, peaked at around 177%. Italy, perpetually cited as Europe's debt problem, sits at around 135%. Japan is nearly double Italy. Here is how Japan got there. After the bubble burst in 1991, the government refused to let the economy reset. Instead of allowing zombie banks and failed companies to collapse, painful but necessary, Japan chose to prop everything up. Stimulus spending, bailouts, zero interest rate, then negative interest rates. For 30 years, Japan borrowed to survive. The Bank of Japan, to fund all this borrowing, became the biggest holder of Japanese government bonds on earth. The Bank of Japan now owns 46% of all Japanese government bonds. Now interest rates are rising because inflation has finally returned. The IMF warns that Japan's cost of servicing its debt could double by 2030. Japan has survived this long because 88% of its debt is held domestically by Japanese banks, pension funds and the central bank itself. But math is still math, and the math is getting worse every year. Japan's export machine, the engine that powered the miracle, is facing a new and devastating challenge. Trump's tariffs. Japan is one of America's most important trading partners. It runs a roughly $70 billion annual trade surplus with the United States, mostly in automobiles. Toyota, Honda, Nissan, Subaru. Cars and auto parts are the backbone of Japan's export economy. In April 2025, Trump hit Japan with a 25% tariff threat on virtually all imports. For Japan's car industry, this was a body blow. Toyota immediately warned it expected a $10 billion hit to its profits from US tariffs. Japan's export to the US fell for 2 consecutive months. Recession fears mounted. Japan negotiated. After months of talks, in July 2025, a deal was struck. The tariff rate was reduced to 15%, down from 25%, but up from the 2.5% Japan had been paying before Trump. In exchange, Japan committed to invest in American projects and ramp up purchases of US aircraft, defense equipment and agricultural products. Japanese companies are now accelerating the shift of manufacturing to the United States. Toyota's output at its US factories surged 28.5% in July 2025. Its output at factories in Japan fell 5.5%. The jobs are leaving. The production is leaving. The tax revenues are leaving. The Made in Japan label is quietly becoming Made in Kentucky. Japan's economy has been stuck in debt deflation trap for 3 decades. It's called the liquidity trap, and Japan is its most famous victim. Here is how it works. When the bubble burst in 1991, asset prices collapsed. Banks became terrified of lending. Companies became terrified of investing. Consumers became terrified of spending. Everyone rationally chose to save, pay down debt, and wait. Demand collapsed. Prices started falling. When prices fall, consumers wait to buy because things will be cheaper tomorrow, which means less spending, which means prices fall further. Deflation. Japan fought deflation for 20 years. The Bank of Japan cut interest rate to zero, then below zero. It printed money on an unprecedented scale. It bought government bonds. It bought stocks. Nothing produced sustained inflation or growth. For 2 decades, Japanese workers watched their wages stagnate. Real wages, adjusted for inflation, barely moved. A generation of Japanese workers, particularly young people on temporary contracts, saw no improvement in their living standards despite working in one of the most productive economies on earth. When inflation finally arrived in 2022, driven by global energy prices and collapsing yen, it was not the good kind. Japan's currency, the yen, has lost roughly 30 to 40% of its value against the dollar since 2021. For ordinary Japanese people, this means everything imported. Food, energy, electronics has become dramatically more expensive. For businesses, it means input costs have surged. Japan went from deflation to the wrong kind of inflation, and ordinary people are paying the price. So where does Japan stand today? The IMF forecasts real growth of just 0.7% in 2026. For the world's 4th largest economy that is essentially standing still. The population fell for the 14th consecutive year in 2025. Births hit a record low for the 10th straight year. With a shrinking workforce and a swelling elderly population, the pressure on Japan's public finances has no obvious release value. Japan's new Prime Minister, Sanae Takaichi, has vowed to reduce the debt-to-GDP ratio by expanding the economy. Immigration could solve the labor shortage but comes with other problems, and Japan's cultural resistance to large-scale immigration remains deep-seated. Japan has begun cautiously opening its doors, planning to admit over a million foreign workers in coming years. But integration of foreign workers into one of the world's most culturally homogeneous societies comes with its own friction. The debate about nuclear energy has returned to. Japan shut its reactors after Fukushima in 2011. Here is what makes Japan's story so sobering. Japan is not a failed state. It is not a corrupt economy. Japan is one of the most educated, most technologically sophisticated, most orderly societies on earth. Its infrastructure is world class. Its people are hardworking and highly skilled. Its companies created industries that changed the world. The lost decade should have ended in the 1990s with a brutal reset. Instead, Japan chose the comfortable path. It borrowed, it propped, it postponed. Every year of postponement made the problem larger. The debt grew. The population aged. The window for reform narrowed. The Japanese reckoning has already begun. The question is how long it lasts, and whether the world is watching closely enough, because Japan is not just a story about one country, it's a warning for every aging, indebted, low birth rate economy on earth, which increasingly is most of the developed countries. If you like my video, subscribe to my channel. Thank you for watching.